You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is June 11th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Monday. The first thing to know is Trump rejects signing G7 communique and preps for summit with North Korea. Geopolitics will be in full throttle on Monday as traders head back to their desks after the weekend break. Expectations for the Group of 7 summit left no disappointments as trade tensions remained highly charged. U.S. President Donald Trump refused to endorse a G7 declaration calling for a reduction of tariffs as he continued to lash out at traditionally close allies for allegedly treating the U.S. unfairly. After Canadian Prime Minister Justin Trudeau called the U.S. tariffs insulting, Trump responded by calling Trudeau's press conference very dishonest and weak. Further criticized Germany for spending less money on NATO than the U.S. and warned that his administration was looking at tariffs on automobiles that are flooding the U.S. market. The second thing to know is global stocks are mostly higher as risk on trade continues. Global stocks are mostly higher Monday as markets appeared unfazed by the widely anticipated outcome of the G7 meeting and were likely consoled with the upbeat tone Trump seemed to have adopted ahead of the summit with North Korea. U.S. futures pointed to a mixed open on Wall Street, with Dow futures leading gains, but both the S&P and NASDAQ showing more caution. The third thing to know is the euro-dollar eyes 3-week highs ahead of central bank meetings. The euro climbed against the dollar on Monday. Oh, that's euro-dollar, not euro-dollar. The euro climbed against the dollar on Monday, eyeing a move towards last week's 3-week highs of the upcoming meetings of both the Federal Reserve and the European Central Bank meetings this week. The Federal Reserve is almost certain to raise interest rates by a quarter point for the second time this year at the conclusion of its 2-day policy meeting at 2 p.m. Eastern Time on Wednesday. Eyes will focus on policymakers' updated economic projections and the post-conference from Fed Chair Jeremy Powell, as investors look for fresh clues on the outlook for inflation and how that will impact the pace of monetary policy tightening for the remainder of the year. Fourth thing to note today is oil heads lower as concerns of increasing output remain. Oil prices got off to a lackluster start Monday as rising U.S. crude production and expectations that OPEC members will raise supplies remained in focus. Underscoring worries over rising output, the U.S. drillers added 1 oil rig last week, bringing the total count to 862. That's the highest number since March 2015, Baker Hughes energy services firm said in its closely followed report on Friday. And the fifth thing to know today is Bitcoin tumbles as hackers hit South Korean exchange CoinRail. South Korean cryptocurrency exchange CoinRail said it was hacked over the weekend, sparking a steep fall in Bitcoin amid renewed concerns about security at virtual currency exchanges as global policymakers struggled to regulate trading in the digital asset. In a statement on its website Monday, CoinRail said its system was hit by cyber intrusion on Sunday, causing a loss for about 30% of the coins traded on the exchange. It did not quantify its value, but in an unsourced report, local news outlet Yonhap News estimated that about 40 billion won, that's $37.28 million worth of virtual coins, were stolen. Our second story today is a story from Reuters.com. Trade tensions drive Chinese auto investors from U.S. to Europe. Chinese auto investors are increasingly pouring money into Europe rather than the United States because of intense U.S. scrutiny of their deals under the Trump administration, according to industry sources and M&A data. More than a dozen leading M&A bankers, lawyers, and consultants told Reuters the number of mandates from Chinese clients to make investments in the European auto sector were increasing, while those for the U.S. sector were declining. Given the way that things are tightening up in the United States, Europe for China is the most obvious non-domestic market that they're pushing into, said Charlie Simpson, who specializes in the auto sector for consultancy KPMG's Global Strategy Group. The trend, which comes as Washington is locked in a trade battle with Beijing, is supported by an analysis of data of auto sector investment in the U.S. and European markets. Our third story is from Investing.com. 3 new U.S. listed China IPOs have been outstanding. Too late to profit? In the past year, there have been 24 U.S. listed initial public offerings from Chinese companies. That's the largest number of Chinese listings on Wall Street since 2010, when a record 39 Chinese companies went public. But in the 8 years since, Chinese listings in the U.S. plummeted following a series of accounting scandals, suspensions, and delistings that kept investors wary and Chinese companies at bay. That appears to be changing now, in part due to its improved accounting and transparency, as well as more attractive valuations in the U.S. But there's another key difference, says Dan McClory of Bousted Securities, which underwrote 3 of the Chinese IPOs this year. His quote is as such: "So now the resurgence is related to Chinese companies coming to the market in the U.S. with Chinese investors. So these companies aren't just coming to the U.S. and thinking they're going to have capital thrown at them. They're coming with their checkbook already from investors from China, who are closer to the company, who know and understand it better, and who are, in a lot of cases, better long-term fits." And that, ladies and gentlemen, is news you can use for today, Monday, June 11th, 2018. Your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great week.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.